seeing some respite after the cliff drop, not just for Alibaba, but very much part of the BAT complex, so the equivalent of the FANG in Asia. We're likely to see more of the same for now. The market is very oversold, but trying to pick the bottom here is akin to trying to catch a falling knife, so a dangerous feat at best. So best to wait for further oversold recovery and more of a meaningful upside rebound, which we haven't seen yet. So for now, recovery expectations, but we have to wait and see.
Okay, what about Tencent, which is also playing very much in the same space? I mean, is it a similar picture with most of these BAT stocks?
Since the volatility kicked off early this summer, they've all three of the BAT stocks have correlated well enough. There are interim technical levels on each of the stocks, of course, that people can watch or trade, but at the moment it's still within that fall from grace mode, in oversold territory, but still too early to call in terms of a meaningful bottom. So better to wait for further meaningful rebounds.
Okay, let's go from BATs to FANG stocks, if we could. Apple and Amazon have both reported numbers distinctly underwhelming. I guess the big question that people are trying to figure out is, I mean, they were the leadership. They were the tip of the spear, right? They have gotten, a lot of these names have gotten crushed, Alphabet, Google, etc. But let's take a look at Apple first, since it's most recently in the news. What's the chart tell you? Where's it going?
Well, it's still within the corrective pattern. The key support levels down below that we could break to continue that corrective pattern. If we look at the FANG stocks overall, Facebook is the real beaten up stock. I think Facebook and Google turn out to be some of the strongest underperformers, but Apple's holding up so far in absolute terms, but also relative terms.